All right, team, welcome back to Walks on Wall Street. And boy, what a change it is. So I woke up very early this morning. I had to get a couple things done. And my flight took off from Miami, Florida to John F. Kennedy Airport, JFK. It was 86 degrees, bright sunshine in Miami, Florida. And now it is a very gloomy and cold 50 degrees. I think it's going to start raining, very cloudy, very foggy, but it's going to be back in New York, not missing the weather though. It's going to be a relatively short live stream because I literally just got off the plane. I have to prepare for some meetings tomorrow, but it was another wild and crazy day on Wall Street, another rally day on Wall Street, and we've been talking about this for a while yesterday. Now, I think the main market mechanics here to look at is that 10-year U.S. Treasury yield as it comes down. The Dixie came down materially as well today, which gave the equity indices a pretty nice boost. But is this the start of a new bull market, or is this just another bear market rally? We'll talk about that tonight. We'll also talk about the Bank of England. We're going to be talking about some action in the gold and the silver futures. And then we will go up to my favorite building, which is the Seagram building right here in New York City. So we're starting off the stream, West 33rd Street, 8th Avenue, right across the street from Pennsylvania Station. And obviously you can see the beautiful Empire State Building in the background. So let's see who we have in the chat and let's get started. I see the ABX girl. Good to see you, ABX girl. Welcome. Hope you're well. I see Sunshine After Rain. I see Adriano Silva. Abdullah, Vinny Castellanos. This is Tom. Aaron Judge hit 62 home runs. Wow. So I saw something come across my Wall Street Journal notification. So big congratulations to Aaron Judge. I'm not a big baseball fan, but if I had to be a baseball fan, I would obviously root for the Yankees. Santa Monica Rodriguez is here. Lotus Blue is here. Good to see you. Myra King says good evening, Tom. GX72 is here. Welcome, welcome. Good to see you. Alton, Gaming Commander, Gregory. Good to see you. T-Cakes, Jane, Michelle McGraw, Melissa White. Terrence says, hey, Tom. Go to the Knicks preseason game. What's going on right now? Is it really? I didn't know that. So there's a Knicks preseason game going on in the Garden right now. You know, I brought my umbrella because I think it's going to start raining here. And boy, am I adjusting to the temperature. I'm used to walking around in shorts and a t-shirt in Miami. And now it was such a weird shock to see everybody, you know, coming off the plane, and everybody is wearing winter jackets, all bundled up. Very strange. I think it's very uncharacteristic for this early in October too. It's usually not that cold, usually not that windy. But the good news is it's gonna warm up. It's gonna be about 72 degrees. I think going into Thursday, Friday, and the weekend should be pretty nice too. So we have that to look forward to. Golden's Dawn is here, says hey. Willett C says, hey Tom, good to see you. Chris Beeman, how are you? Always a pleasure. Thank you for being here. R2D2 is here, says, hey Tom. Ooh, Chris, you're not feeling good. Please, please, please feel better. We are hoping and praying for you over here. So we had some pretty big news coming out of one of the most successful hedge funds on Wall Street, which is Bridgewater Associates. Obviously the hedge fund that Ray Dalio founded. And Ray Dalio is officially calling it quits. He is retiring after a long and extremely successful career. So I believe in 2017, Ray Dalio stepped down from the CEO or Chief Executive Officer position and stepped into the co-CIO role. But I was reading on the plane tonight, or earlier this evening, that Ray Dalio is now stepping down. He's calling it quits, and he's going to be passing the baton over to his successors. It looks like we got some police action here. Hey, Sweet Country living in Michigan is here. Says, hey Tom, good to see you. Felix says, crazy weather, welcome. Nick Rock says, hey Tom, welcome back to New York City. I emailed you my resume and cover letter. I did get that. So I looked at it a little bit on the plane today, but I would say over the weekend I'm probably gonna have some time to take a little bit closer look at it. But thank you so much for sending that to me. I'm gonna see what I can do. Hey, War Walker's here. Says, oh Tomcat, you're back in the Big Apple. Good to see you, War Walker. Some people are saying you're happy to be back. Yes and no. I would say yes and no. Definitely not a big fan of the weather. It is misty and it's cold, but I gotta get some stuff done here. It's gonna be a short stream, probably about an hour and a half maybe. I gotta get the earlier train back because tomorrow is gonna be an action-packed day for me. Pretty much back-to-back meetings across the board. But yeah, a lot of crazy action in the markets. Now, one of the things that I wanted to note, I always say this, I'm like, if we want to figure out where that stock market is going to go, you got to keep your eyes peeled on the bond market or the debt market. And I think the events that happened last week with the Bank of England really solidifies that statement. So whenever you have an uncontrolled sell-off in the debt market that wreaks havoc across the board and spills over into the equity market and puts pressure on stocks. So one of the interesting things that we've been seeing the past 2 days, has anybody been watching the major moves in the bond market? We had a massive move in that 10-year US Treasury yield. It's come down substantially. I think as of today's close, we're trading at about 3.6% on the 10-year US Treasury. I think the 2 years actually come down a little bit as well to 3.99%, but I think it pushed over 4% to close the end of the day. So the yield curve is still pretty inverted, but if you notice, those yields have actually been coming down, signaling that we've been seeing some buying in the bond market. Now, just who that is, I'm not too sure, but you have to wonder, because if you remember all the way back to Jackson Hole, not only did we obviously hear from Fed Chairman Jerome Powell, in which he said he was going to be very, very tight in relation to monetary policy, but we also heard from our good friend over at the Bank of England, Governor Andrew Bailey, in which he sort of said the exact same thing, right? He was saying he was going to be very, very tight on monetary policy and not to pivot too soon, because that would send the wrong message to the market as it relates to inflation. Well, he was forced to show his hand, and now they're buying, I think they authorized up to 64 billion pounds of UK government debt to provide liquidity and essentially bail out the market, because we had a massive panic in the market after the new prime minister thought it would be a good idea to launch a massive spending bill and cut taxes to add fuel to the fire, I would say, onto this inflation mess. Now, in the UK, I think inflation is probably over 9%, maybe just at 9%. So I'm not too sure that was the most wise decision to announce tax cuts and big spending during this time. But we'll talk about it. We'll figure it out. Hey, Brian is here. Is this all right, Tom? Back in New York City. Yeah, we're going to be back for a little bit. I have some meetings here. Tomorrow's going to be a busy day for me. Gaming. Commander says that's bad for the UK. That's my country. Yeah, well, I mean, I would say that, you know, the United States has been in a very favorable position, mainly because the dollar strength has been, or the dollar has been extremely, extremely strong. And that has been wreaking havoc on emerging market currencies. But when we had that massive sell-off in the debt market in the UK, essentially what that caused is a lot of these pension funds that had a lot of derivative exposure to these bonds, they started to get margin called. So essentially it's sort of like a waterfall effect, right? In order to meet your margin call, you have to start selling assets. And then it's just sort of a spiraling and an uncontrolled sell-off in the debt market. And that's exactly what happened, which prompted the Bank of England to come in there and essentially stop a financial crisis. So they had to provide liquidity and start buying bonds, which is sort of the conversation we're picking up on from yesterday, that we understand that central banks from all over the world, with the exception of, I would say, the Bank of Japan and Turkey, they seem to be taking a very, very hard stance on monetary policy. And it's one thing to take that hard stance, and we believe them that they're not going to pivot. But I think there's so much debt in the system, and we've been in a period of artificially suppressed rates for a decade now, that it's almost come to the point that the system doesn't function without debt being issued in perpetuity at lower rates. So I'm not too sure how they're going to navigate this. This is going to be very interesting, because it's not like the governor of the Bank of England wanted to pivot. He was forced to, or you would have had a financial crisis. Hey, Dusty Cole is here. What's up? Dusty, good to see you. I hope you guys have your winter hats on and winter jackets. Boy, what a change it is from being in Miami. So when I woke up today, I think it was about 86 degrees, bright sunshine in Miami, Florida. And even though it's only, I mean, it's not that super cold here. Probably like 50, maybe 55, 56 degrees. But to me, it feels like it's 20 degrees. It feels like it's going to start snowing because we've been in crazy amount of sunshine. Hey, Marcelo Gillis here. Says, hey, Tom, good to see you back in New York City. Have a nice live as usual. Thank you so much, Marcelo. Marcelo is joining us from Brazil. Hope you're well. Hey, Dan Zanks, is Tom. The Australian Central Bank was expected to hike by 50 basis points, but only did 25. Yeah, I mean, Dan, I saw that. So what do you think? Do you think that... I think that the Australians were probably looking at the situation that was happening over in the UK, and they sort of saw what was happening, right? And I don't really think that many people understand just how bad the situation got, to the point where the Bank of England had to essentially cave and start buying bonds again, or gilts, as they call them, gilts. So I think you see central banks around the world saying, okay, we have to go into a conservation mode here and really handhold the markets and say, look, even though we're going to be really hard on inflation, okay, let's ease into this thing so we don't cause a pandemonium. So here we are at 34th Street and 6th Avenue, or Herald Square. Man, the Empire State Building looks nice tonight. That classic white amongst the rain and the clouds. Now I will say this, and you guys know, I would rather have it being pouring rain as opposed to this type of rain, because you can't really use an umbrella in this type of rain. It's like a mist. It's like you're walking through a nasty mist. Hey, TMBs, is markets behaving like a 50 basis point raise next time? This is TMB. Good to see you, TMB. Thank you for being here, my friend. Hey, Alejandro is here. Says, what about Twitter and Musk? You know, I haven't really been following that too much. I sort of, you know, one of the things I do when I find something that's, I feel like I'm getting a little bit too distracted by, is I mute those specific words on Twitter. So I've muted like the phrases and terminologies like Musk is buying Twitter. Just because I don't think it does me any good to worry about it or think about it. But sort of what's going on with that? Is Elon Musk going through with that? I think he's almost forced to go through. I think he's going to buy it. Alejandro says apparently the deal is moving forward. Yeah, I mean, the last that I saw about it is because I muted it because it was just getting too like ridiculous. It was just a bunch of people fighting over should the deal go through, should it not, and it's just like it's a Twitter deal. So I don't know. Do I think Elon Musk is going to make Twitter a better platform? Maybe. Do I think Twitter is my favorite social media platform out there? Yeah, I do. You guys know me. Twitter is by far my favorite social media platform by leaps and yards, because there's a lot of smart people on Twitter. You'd be surprised, especially if you hang around like financial Twitter or FinTwit or real estate Twitter. There's actually some very, very well-respected and notable hedge fund managers on there. And you could actually get to communicate them and they'll respond to you. You know, if you post your research and your equity research on there and people like it, you never know you never know where that may take you. So if you guys want to follow me on Twitter, I usually post some interesting things from time to time. You could follow @WalksWallStreet. Wow, check this out, man. This looks like a huge rain cloud is moving right through the Empire. Now, this is the worst kind of weather to walk around in New York, but it does look the coolest, I'm not gonna lie. It's like a misty cloud moving through the Empire. 10 out of 10 on that. Fantastic. Hey, we have Ed. What's up, Ed? Good to see you. Ed Dunkel, welcome. Billy says, Tom, the deal is moving forward at $54.20 per share. Elon bought at the high. Oh boy, did he buy at the high. Insane. Hey, Ramp 5 is here. What's up? I know, Dan Zhang says, Tom, I feel like you came back to the city at the worst time. It's been raining for the past 3 days. Well, I think, and it's windy and it's freezing, but I think, here's the good news, Dan. I think I'm gonna bring some of that Miami, Florida heat to New York, because Thursday, Friday, Saturday, and Sunday, it's supposed to be in the 70s. So it's supposed to be like 75 degrees, sun. It's gonna be good. It's gonna be nice weather. I'm excited. Hey, Renee is here. Good to see you. Says I miss the city. Derek says hello from Long Island, New York. Oh man, it is a nasty, nasty night out. Let me know if you guys could hear the wind noise in the mic. If you don't have a microphone, I gotta buy one tomorrow. Hey, Western Mass Dave. Thanks for being here. Good to see you. Hey, Chris Beeman, thank you for joining. Please get well soon. Time lapses. Hey, Tom, what do you think about precious metals? I loaded a significant amount around a week ago. There will be more high inflation coming. Well, I think gold caught a nice bid. Did you see the move on silver? I was looking at silver futures. Silver and gold had a pretty nice bid, but here's my concern. And I sort of wrote down some notes. I just got off a plane, so I'm a little bit disorganized here, so forgive me. But I think that this most recent rally is just going to be a normal bear market rally. So if you remember from yesterday, what we talked about is a lot of the indices, so the NASDAQ, the Dow Jones Industrial Average, and the S&P 500, they're about 10 to 8% extended to the downside from their 50-day moving averages. So we could see a neck snapper rally back to the 50-day. If you go on tradingview.com, which is a free trading software that you could use, pull up gold futures and pull up silver futures as well. And notice where they rallied to today. And I'm talking big moves. There was a big, big move in silver. They just rallied to their 50-day. So it's a possibility that they could roll over, but I think in relation to precious metals and commodities, if the bond market has an uncontrolled sell-off like they did in the UK, where the Bank of England had to step in and start buying gilts, then I think you're going to see a ton of cash move into commodities, move into precious metals, assuming the Fed doesn't come to bail out the market. But it seems like somebody, either Monday and today, has been buying U.S. Treasuries. Have you guys been watching the yield on the 10-year U.S. Treasury? It's come down from 4% all the way to 3.6. So we've been seeing some buying in the bond market, which has been creating some stability. But these moves have been wild. Really, really strange whiplash moves in the bond market. Wow. So this is the one thing I miss about New York the most. I wish we could recreate the Empire State Building and put it smack dab in the middle of Miami. I love the Empire State Building. This is a 10 out of 10. Even though I'm getting soaking wet, this is still a 10 out of 10. Love the Empire. Hey, John Sorley says, hey, Thomas, nice to see you in New York. Thank you, John. I appreciate it. Thank you for the warm welcome back. Hey, Julia M says, you're in New York City. I didn't know. Yeah, so I flew out of Miami today at 4 p.m. It was a really, really quick and easy flight. It was like 2 hours and 24 minutes. We touched down in New York. But I'm adjusting. You got to give me a couple minutes to adjust to the weather. It's freezing. Renee says, I do too. Hey, Dubs says, Tom, I don't like gold, never have. The reason being, it is just most of crypto. It has no proven utility or productive value, says Dub. Interesting. I would respectfully disagree with that, but I mean, look, there's tons of opinions on gold. We're gonna have a shorter than normal stream, so maybe we'll go into it a little bit later, but if you look back to our dollar milkshake stream, we sort of talked about it, but Bitcoin has rallied back to its 50-day. Hey, Dusty Cole says, hope you're dressed for the weather. Thank you, my friend. Yeah, I gotta buy some winter clothes here. But then again, like I said, we only have to wait for 2 days and then it's gonna be back to beautiful weather here in New York. It's gonna be 74, 75 degrees on Thursday. So now we're on the corner of Madison Avenue and 34th Street. Looking uptown, you can see the beautiful One Vanderbilt building. Check that out, fantastic. Hey, Beyond the Matrix is here. So my favorite New York City buildings are the Twins, the Empire State Building and the Chrysler Building. Are you referring to the old World Trade Center? I'm gonna assume you are. Hey, Philly is here. This is my guys back in New York City. Thank you, Philly. Thanks everybody for the warm welcome back. I appreciate that. Let's walk over, we'll walk up Madison Avenue because I think there's gonna be a lot less wind on Madison Avenue. But everybody, I did want to see, oh yeah, so Charlie Richardson says some celebrities are getting fined for promoting cryptocurrencies. So I want to just take a step back. Does anybody remember the live stream when all of this cryptocurrency craziness, all this nonsense was going on? And you had people like Floyd Mayweather, Kim Kardashian, all of these celebrities promoting all this nonsense. Does anybody remember what I said on the stream? I said these people are going to pay the price, and the SEC is going to make an example out of somebody. And I think Kim Kardashian is just the first one. I think the SEC fined her about $1 million. Now, granted, $1 million to Kim Kardashian's like pocket change, but you sort of get the picture, right? Now, there's been a lot of smaller creators and smaller people on YouTube and Reddit, Twitter, promoting these cryptocurrencies. And my advice was stay away from this stuff. Stay as far away from it as possible, because a lot of these alternative coins or alternative cryptos, whatever you want to call them, the SEC will probably deem them securities. Because the way I explained it, oh, this is the Morgan Library, by the way. This place is fantastic. This is a New York City icon right here. This is one of my favorite buildings in all of New York City right here. East 36th Street and Madison Avenue, the Morgan Library. Beautiful. If you've never been in New York City and you come to Manhattan, this is, before you leave, you have to come here. This place is, I would say it's up there with the Met. It's beautiful in here. So anyway, what I was saying is a lot of these cryptocurrency projects, so to speak, you have a group of investors. Oh, look at that rat. Our first little baby rat of the stream, FredX. Or maybe that's a mouse. Maybe that's not a rat. Ooh, there's 2 of them. 3 of them, one right there. Essentially, what you have is a group of investors raising money from people, and just because it's not a traditional stock, they think they can get away with it. But if you look at securities law, the definitions, these are, I mean, in my opinion, right, securities. So my stance has been, until the SEC, the Securities and Exchange Commission, can provide clarity, actual regulatory clarity on a lot of this stuff, I would completely stay away from it, especially if you don't have the big bank account like Kim Kardashian, because it only takes one mistake and the SEC can make a big example out of you and destroy your life. And also, a lot of these cryptocurrencies are just outright frauds. Okay, team, we are outside of the Morgan Library and Museum. Very seldom do we come up here on the live streams, but I will tell you that this is one of my favorite places to come when I'm in New York City. It is beautiful in here. And I'll give you a quick story. So some of the exhibits in the Morgan Library are traded back and forth between the Henry Clay Frick Museum, which is further on the Upper East Side. Now, the Henry Clay Frick Museum right now is under construction. So if you still want to go to the museum, you can do that, but it's just going to be in a separate building. And the last time I was at the Frick Museum, it was still great, but the real value of going to the Frick Museum is to actually see the mansion and be inside the house. So it's under massive renovation. It's going to look fantastic. It should open in 2025, I think. But if you want to see all the exhibits, I think they moved it maybe 2 blocks over on the Upper East Side, but the actual Henry Clay Frick house is no longer there. But I would still recommend it 100%. Hey, Beyond the Matrix, thank you so much for the $10 donation. You are very, very kind. Says thank you for always sharing great information. Well, thank you so much. Appreciate it, Beyond the Matrix. Thanks for being so kind. Hey, we have Estelle here. Hey, Estelle. You know, since we're waiting at the red light, I'll give you guys a quick view of the outside of the Morgan Library. Hey, Marcy, what's up? Good to see you. Marcy is our good moderator. I'm just showing everybody the outside of the Morgan Library. Haven't been here in probably a half a year. But this is one of my favorite places, especially for all of you who love books, like big book collections. This place is the place to be. It's fantastic. Yeah, Sunshine After Rain's like beautiful library. Have you been here, Sunshine, to the Morgan Library? I think we had this conversation before. Hey, Bob She's here. Says this is Bobby. Great job with your stream in being so informative and appreciating the history of the buildings. Hey, thank you so much for saying that. I appreciate that very much. Yeah, since this is our first night back in New York, I'll probably stop pretty often to point out all my old favorite spots, but that's definitely up there. The Morgan Library is fantastic. Yeah, Ryan Royal says Morgan Library is on my list of places to visit. It's up there, man. It's definitely up there. Ryan has also put the Henry Clay Frick Museum up there as well, but the only disappointment is that the actual house that Henry Clay Frick lived in is under construction, under renovations. Hey, Rafed, thank you so much for the generous donation. I appreciate it. R2D2 says I love books. So speaking of books, there was some very big news on Wall Street today that I think is pretty notable for me to point out, because we talk about this individual all the time on the stream. And oftentimes what I'll do, at least once a stream, I like to give everybody an update. Well, not really an update, but some tips of good financial information that you should either, find online or maybe books to buy. So I would say without a doubt, the largest and most successful hedge fund on Wall Street, Bridgewater Associates, that was founded out of a one-bedroom apartment here in Manhattan many, many years ago by a gentleman named Ray Dalio. So Ray Dalio announced his retirement today. Now, I believe in 2017, Ray Dalio stepped down as the chief executive officer of Bridgewater Associates. However, when he stepped down as the chief executive officer, he actually stepped into the co-CIO role at Bridgewater Associates. But as of today's close, I think oh no, she's waiting at the light. Ray Dalio is no longer a part of Bridgewater. So he is now passing the baton off to his successors. And Ray has just had an absolutely, just like a dream career on Wall Street. He's an extremely, extremely brilliant guy, smart guy, and also very, very helpful too. Oftentimes we talk about many of the books he's written, such as Principles by Ray Dalio. So I would like to recommend another piece. It's not a book, but it's an interview that Ray Dalio did with former Fed Chair Paul Volcker. Now, if you've been watching the streams a lot, which many of you are not new to the streams, I've recommended this interview before. Now, why might I have... This is a beautiful dog. I'm not sure if Fred X is here. 10 out of 10 on the dog. Fantastic. I'm not... So the reason why I'm recommending this particular interview with Paul Volcker is because Ray Dalio is very famous for saying the following. And he says the best investors, or the most successful investors, are the best students of history. So if we look back to when Paul Volcker was the Fed chair, in March of 1980, the United States was battling 14.5% inflation. And Paul Volcker came in and raised interest rates all the way to 20%. Now, by raising interest rates to 20%, Paul Volcker was getting called every single name in the book. There was petitions to throw him out of office. But Paul Volcker was steadfast, and he did manage to kill inflation, but not without any drawdowns. The unemployment rate spiked to over 10%. Now, going back to what I said, that Ray Dalio says the best investors are the greatest students of history, I think we're entering into a very similar time period right now, where we have, for the first time in a decade, the Federal Reserve being very, very hawkish in relation to monetary policy. We're seeing the Federal Reserve being unrelenting as it relates to raising interest rates and allowing their bonds or mortgage-backed securities and U.S. Treasuries to roll off the balance sheet. So there's a particular interview, I think maybe one of our moderators could drop it. I forget the Nightbot command. I was going to reprogram the Nightbot, but I just got off the plane. I didn't have time. But if you go to YouTube, maybe open another browser, just type in Ray Dalio, Paul Volcker interview, and watch it. Or you could buy Paul Volcker's book. Ooh, it is so windy. I'm not sure if you guys could hear the wind in the mic. Hey, Tish TV is here. What's up, Tish TV? Thank you for joining. We are right outside of the PwC PricewaterhouseCoopers building. Oh, Sunshine After Rain dropped it. So if you guys want to read that, want to listen to that interview, definitely check it out. Hey, Pim Slickens says, good evening from Alabama. Welcome everybody from Alabama. Good to see you. Nako says, hi Tom. Mike C says, what does someone as rich as Ray Dalio do when he retires? I guess whatever they want. Well, Ray's a really good guy, and he allocates a lot of his wealth to philanthropy. So he donates a lot of money. He's probably gonna, spend a lot of time on probably writing more books, maybe financial education, things like that. Ooh, but we got to go to the Stephen Schwarzman building, so we're gonna cross here, go to Library Way. So Stephen Schwarzman is a big, big player on Wall Street. He actually just came out with a book that I recommend. But Stephen Schwarzman made the vast majority of his money with LBOs, or leverage buyout deals. And he was the co-founder of the firm Blackstone. Hey, PB on the go says, wow, Tom, you're back in New York, so different from Miami. Yeah, PB on the go. I'm adjusting to the temperature, let's just say that. When I left Miami, Florida this morning, it was 86 degrees. And I walked outside with the t-shirt and shorts on. I was like, wait, I'm gonna be in New York. I gotta bundle up. So I have the whole 9 yards on here. I think it's 52 degrees, but that may not sound cold to you guys. But to me, being in 86 degree weather, it's pretty cold. It's also raining, so. Marcy says, Tom, you still headed to Frisco? So I'm not going to be going to Texas. I'm going to be doing that all virtually. So right in front of us, everybody, is the New York Public Library here. The Stephen Schwarzman building. Now, I'll give you guys a quick tip because we have a lot of new people here from Florida. If you visit New York, and you want to, if you have a particular rare book on your mind, this library has it, and you could actually make an appointment to go to the NYPL Research Library, which is right here, and you could take out one of their extremely, extremely rare books, and you could sit there and read it. So I'll recommend one to you guys as it relates to finance. And it's, hold on one sec, I think we got a SoCal Lawrence's quickest way to get from LaGuardia to Manhattan. Ooh, if you can, I would fly into JFK because LaGuardia Airport, I'm not a big fan. I think you got to take the bus from LaGuardia to Manhattan. What I would recommend, if you can, fly into JFK, take the air train to Jamaica, and then from Jamaica take the Long Island Railroad to Penn Station. I never really fly into LaGuardia, in full transparency, but thank you so much for your donation. I appreciate you very much. Any other New Yorkers in the chat, if you know the best way to get from LaGuardia to Manhattan? UW says LaGuardia has a bus to the 7 train. Yeah, so 7 train is pretty painless, but you know, the good thing about JFK is you could just go right on the air train, which is good. Anyway, so I'll give you guys a quick tip for any of you interested in reading probably one of the greatest finance books of all time as it relates to value investing. So it's going to be right here at the research library. Now, you can't take the book out, okay? You can read it, but you cannot take the book off the vicinity. There was only 5,000 copies ever printed. Only 5,000. So this book is extremely expensive. I think if you wanted to get an original copy of this particular book, it's probably going to run you over $5,000. So without further ado, I guess I'll tell you what the book is. The book is called Margin of Safety, and it is written by Seth Klarman, who is a very, very famous hedge fund manager right here in New York City. And the reason why I always recommend Margin of Safety is because there was one Berkshire Hathaway meeting, and somebody raised their hand and had a question for Warren Buffett, and he said, you know, Warren, if you could recommend anybody but yourself to listen to as it relates to investing, who would it be? And Warren Buffett really couldn't think of anybody at the time, but after thinking for maybe 1 or 2 minutes, he got on the microphone and he said, you know what? If I really had to recommend somebody, it would be, you know what? It'd be that guy Klarman. Yeah, maybe Seth Klarman. And Seth Klarman's style of investing is very similar to like a Ben Graham, right? Value investing. Now, I believe there's PDF copies on the internet of this particular book, Margin of Safety, which you guys could look. I think I actually, in the Discord, if you guys want to read this book, if you join our Discord here, link in the description, I think I actually posted a link to the PDF copy of Seth Klarman's Margin of Safety. But the second thing that Warren Buffett said, he's like, you know what? It would probably be Seth Klarman, and then if I had to pick another one, it'd probably be Phil Fisher. And Phil Fisher is a very, very famous money manager on Wall Street. His son now runs Fisher Investments. But Phil Fisher wrote the very, very famous book, Common Stocks and Uncommon Profits, which that is readily available. You could order that off of Amazon for probably a couple dollars. So I would recommend those 2 books, but if you want to read an original copy of Seth Klarman's Margin of Safety, you could do it right here at the Steven Schwartzman building. You just have to make sure you make an appointment. Hey, Ramses Morales is how many books do you read a year? By the way, I just borrowed of the public library, The Prince by Machiavelli. It was recommended on one of your lives. So grateful for this. Hey, thank you so much. So I tend to reread a lot of books. And I'm not a big audiobook kind of guy. I just, for some reason, I cannot focus on an audiobook. But if I have a physical book, I could manage. I don't know, it's not a huge amount of books I'll read. The books that I really, really like, I'll go back and read those, or I'll read very specific parts of those type of books. But if I had to put a number on it, maybe 10. And then just like bits and pieces of other things. All right, you guys are gonna like this. This is the beautiful Chrysler building. And the Chrysler building sits on the right-hand side of Grand Central Terminal. Now, one of the things I noticed about Miami, which I really, really like in comparison to New York, the streets are much cleaner in New York City. I mean, in Miami, Florida. But I guess it's a work in progress. Hey, I see Roy S. Good to see you. Photos from around New York is here. This is Chrysler Building in the midst. Hey, Tariq is here. Says, thanks for the Blade helicopter tip. I'm going to do it next time I fly to Miami or fly to JFK. So I've never taken that. Maybe somebody else gave you the tip in the chat, but yeah, I think Blade is actually owned by Uber. Is that correct? I think Blade is owned by Uber now. And if you go to the west side of Manhattan, I think by the West Side Highway, you could get in a helicopter and they'll take you to JFK. I think it takes 15 minutes, but I think it's like $100. Has anybody done that, by the way? Has anybody taken one of those Blade helicopters? Solo Flyer says, hey, what's up, Tom? The Q70 out of LaGuardia is your best bet. Thank you, Solo Flyer. So whoever asked that question about what is the best way to get from LaGuardia to Manhattan, definitely listen to that comment. Take the Q70. You know, I will say this, for whatever reason it is, every time I look for the airfares going to New York City, LaGuardia is always the most expensive. And I'm not too sure why that is. The least expensive is JFK, always, coming from Miami or Fort Lauderdale. The second least expensive is Newark, New Jersey. And then LaGuardia is always expensive, which is very strange to me. I'm not sure why that is. But 305 Travels says, I've heard Japanese stock investors read The Art of War. So Art of War is a good book. Wow, Pink Curbs is, by the way, LaGuardia is beautiful now. Is it really? I'll take your word for it. You know what's really nice now too? Not gonna lie. JFK is actually very, very nice. I was at the American Airlines terminal today. Very nice. All modern, brand new. All right, team, here we are, 42nd Street, Vanderbilt Avenue. The one, the only, the beautiful Grand Central Terminal right here. And right behind it is the MetLife building. And we are actually going to be walking up Park Avenue, which I tend to call it the real Wall Street of Manhattan. Now, obviously, the original Wall Street is in Lower Manhattan, which you'll see, you know, the New York Stock Exchange and the like. But now that we have electronic trading, algorithmic trading, a lot of the financial firms, the investment banks, have migrated uptown to places like Park Avenue, Times Square. I believe also Deutsche Bank, which is the German bank. It trades under the ticker symbol DB. They actually just got rid of their place on Wall Street, and they moved to the Time Warner Centers, which is now called the Deutsche Bank Towers, which is located at 59th Street and Columbus Circle. So not even Deutsche Bank is on actual physical Wall Street anymore. They have migrated uptown to Columbus Circle. Oh, guys, which brings me to my next point. Did you guys see that news? I forget the gentleman's name, but he owns the Miami Dolphins. And speaking of the Time Warner Center, now called Deutsche Bank Tower, I think he just sold his apartment. I think it was for $30 million. Could anybody Google that? Because I briefly just saw it for a second when I got off the plane. But he had a really, really nice apartment in the Time Warner Centers, now Deutsche Bank Towers. I think the address is 25 Columbus Circle. So one of the towers is a residence. So they're all condominiums, apartments, but on the other side is a 5-star hotel, which we actually walk around all the time when we're doing our streams in Miami, which is the Mandarin Oriental. It's located in Brickell Key, but the Mandarin Oriental here in New York is located right at 59th Street. So does anybody know who the owner's name of the Miami Dolphins is? I'm blanking on his name. But that was a big real estate sale that just happened. Hey, Spencer says, Tom, take us to One Vanderbilt. Look out. Maybe one day we'll do that. Ramp 5 says Grand Central Station has the best foreign currency exchange in the city. You know, I think you're right. So I think Carson says Stephen Ross. You're correct. Yeah, you guys are right. So he's just sold his place. He had a really, really nice place in the Time Warner Centers. Just sold it. I think he sold it at a loss too. Could anybody Google how much he sold it for? I think he may have bought it for around 40 something million and he just sold it for 30. I wonder why he sold it. Hey, Tom from Midtown is here. It says, can't imagine ever calling it anything other than the Time Warner Center. I know. It's so true. Yeah, I mean, that used to be my old stomping grounds when I would go to class. I would take the LIRR to Penn Station, then take the train to 59th Street, Columbus Circle, and go to class right there at John Jay. Yeah, Joe's like, you could take the LIRR to Grand Central now. Is that open now? I think it opens soon. I'm not sure if you could do it right now. Yeah, but that is the East Side Access Project, which has been many, many years in the making. Talk about sit and wait. Oh, Renee says he sold it for 40 million. Russ says, Tom, I no longer watch TV. I only watch your streams at night. I appreciate that, man. Thank you so much. Somebody says, I didn't look it up, but based on the answer in the chat, I'm guessing $40 million he sold it for. Tom from Midtown says, it's like they tried to rename the Queensboro Bridge to the Ed Koch Bridge. Yeah, that's true. You know, speaking of real estate, if you look at the trend, you're seeing a massive decline in the volume of luxury real estate sales. I'm talking like the real gaudy, real crazy ones. But sort of like the middle of the pack is actually holding up relatively well. And I think maybe the answer isn't as obvious as maybe one would think. But here's my thesis on that. Everybody, essentially all the millennials that's a first-time home buyer, everybody is in the market for like a 3-bedroom, 2-bathroom home, 4-bedroom, 2-bathroom. But who's really in the market for 10 bedrooms and 3 baths and half baths? It's just crazy nonsense. It's more like these people are just buying them for collectibles. You know, there was one really interesting article out of Bloomberg that they called them piggy banks in the sky, right? Now, I don't really want to go into that too much. But I mean, look, if somebody's gonna, especially a lot of these apartments on Billionaires Row that are going for like 80 million, 90 million, I think we could put 2 and 2 together why the majority of the people are buying them. And if you look at the nights stayed, these people never even are there. They just buy it and it sits empty. So anyway, but the demand for mid-market, middle of the road, middle-class housing is in very, very high demand. So one of my, I guess, strategies for real estate investing for me, and again, this is just my personal opinion. Don't follow me down this road. I could lose money. This is just my thesis. I'm looking for real estate in particularly, not necessarily multifamily, but I would say single family, duplex, triplex, in just very basic, maybe even lower middle class to middle class neighborhoods. Because the way the economy is going now, it's very, very hard for people to save large down payments. So I think there's always going to be a market for metropolitan areas around bigger cities for houses in the realm of maybe $395 to $600, right there. For single family homes, maybe 3-bedroom, 2-bathroom, 4-bedroom, 2-bathroom. And these properties cash flow rather well, especially if you can put a sizable down payment and get a pretty decent rate on the debt. But I don't know, that's one of my thoughts on it. Society 5150 says, what years did you attend, John J? I think I graduated, when did I graduate? I don't even remember. 2017, 18? Maybe it was 17. I think, I'm gonna say 2017, I think. Hey, Ramsey says, very true. I believe the Canadian government started to track down foreign investors for the same reason a while ago. Yeah, so to your point, I'll piggyback off that for a second. So we always walk Billionaires Row here in New York City, which maybe we'll go there today. Now, I don't want to give it a bad name. There's just normal run-of-the-mill people that live on Billionaires Row that are very wealthy, they own businesses. But there has been issues in the past where people have used these types of apartments for, money laundering, things like that. And the government now has their sights set on a particular community in just north of Miami called Sunny Isles Beach. And Sunny Isles Beach is absolutely gorgeous. If anybody has not been there, if you ever go to Miami, Florida, take a trip to Sunny Isles Beach. That is absolutely beautiful. But just like here in New York, we have a Billionaires Row on 57th Street. They're building these mega super talls right on the water. One of which I think is the Porsche Design Tower. Another one is the Bentley Tower. And some of these apartments can go for well over $20 million. I think here in New York, where Ryan Serhant is actually the agent that is trying to sell the top penthouse in the beautiful Central Park Tower for $150 million. Insanity. Can you imagine that? $150 million on an apartment. The taxes alone must be $75,000 a month. Beautiful building. Love it. Oh, Peter's like, Tom, I was in the Westin Hotel yesterday. How'd you like it? Thumbs up, thumbs down? Would you recommend a stay at the Westin? Oh, Robert says you thought it was 250 million? I was about $100 million off. I think you're right. I think you're right, actually. Could we Google that, by the way? Could anybody Google how much is the penthouse at Central Park Tower? I think you may be right. I think it may be $250 million. Talk about crazy. Okay, so this is 2nd Avenue, East 42nd Street. We're gonna walk back down 42nd Street to the Bank of America Tower and Bryant Park. Oh, it is 250 million? Wow. Hey, Ronald says, I know Sunny Isles Beach in Miami very well. Yeah, it's one of my favorite places. I love it. Hey, Laura M says, you're passing by Pfizer. We are. Pfizer is right here. And I think across the street may be New York 1, I think. Marcy says, I think it's 250 million, and Ryan Serhant is showing it. Yeah, I think Ryan Serhant is the top real estate sales guy, I think, maybe in the world, I think. Very successful. Buff20 says, Tom, what do you think about Elon Musk saying he will buy Twitter to avoid the trial? So to be full honest, I haven't really been following that. I've actually been trying to avoid that just because I think getting into that conversation doesn't really, I found it was wasting my time. But at the end of the day, I think everybody knows my opinion on Twitter. I think Twitter is by far, without a doubt, the best social media platform out there because it has an educational component to it. Especially if you're on financial Twitter or real estate Twitter, you can actually make contacts with some very, very notable people on Wall Street, and they're very active on Twitter, and you can engage them on a one-on-one conversation. It's almost very bizarre, and I think that's very unique to Twitter. So I love Twitter. Do they have issues with bots and spam and scams? Yeah, I think they do. But, maybe with new leadership, could they fix some of that stuff? Absolutely. Because for me, if you look at other social media platforms like, I don't really want to be super negative, but yeah, I just think that, Facebook is just it's so toxic. I had to delete my Facebook account because Facebook, for me, and again, I don't want to speak for anybody else, it turned into a wasteland of people arguing with each other over politics. So it's pretty much just like a political debate platform where people are just like so enraged. And I feel the posts that Facebook algorithms push the most, they seem to push the posts that'll get a rise out of people, that'll make people all upset and bent out of shape to drive engagement. And I don't really respect that. So I don't even use Facebook. But Twitter, you could actually have a very, very good conversation with people, and they share their market research. I'm on Twitter a lot. If you want to follow me at Walks Wall Street, I always post some of my equity research and stuff like that. But yeah, I think I'm bullish on the acquisition. Do I think he overpaid? Yeah, I think he probably overpaid by 5x. But then again, I think he could probably afford it, right? If there's anybody who could afford it, it's probably Elon Musk. Hey, BB says, I agree, I like Twitter also. Marcy says, I haven't been on Facebook in years. So you know what I think will be a good piece of market research here? So Meta stock, ticker symbol META, has really fallen off a cliff. It broke its 200-week moving average about 2 months ago, and the thing has been in free fall ever since. And a lot of my friends who are actually money managers say, this is like it's trading at such a discount. I'm like, dude, ask yourself, do you know anybody who uses Facebook? And they're all like, no. And yes, I understand that Meta owns Instagram. I get that. But nobody really uses Facebook anymore. Now, and I understand that they make a hell of a lot of money off of targeted Facebook advertising for small businesses. I know small businesses rely a great deal on targeted Facebook ads. I get that. But I think you're starting to see a trend emerge where a lot of people just aren't spending their time on Facebook. So maybe we'll have our own Walks in Wall Street poll. Who here in the chat, you could just type a yes or no. Do you have a Facebook account? And if so, do you use it? Yes or no? I think that's we have about 800 people in the chat. I think that'll be a good piece of research. So do you guys use Facebook? Yes or no? Stephanie's like, I don't. There's a lot of drama on Facebook. Mike sees like I use Facebook to tell people I went to high school with happy birthday. Hilarious. Okay, so Mike sees, I'm seeing a lot of no's. The Truth says no. Jordan says no. Joe, Greg says yes and yes. Wow, Photos from Around New York says no. So Peter uses it? Okay. I don't know. Yes. Okay, Sunset Blue says I use it for family info. All right. Abby one says I never even created an account. Whoa. Manthony says no. Andy says no. So just think about this, everybody. If you're watching the live stream, pay attention to the chat. I think that's pretty important. Because a lot of the times if you read in like the Wall Street Journal or, a major news publication, they'll say, out of a poll of 600 people, we have about 810 people in the chat right now. And overwhelmingly, everybody says no, they don't use Facebook. So I think that, pay attention. I mean, I understand Meta is trying to pivot towards the metaverse and things like that, but their main moneymaker is Facebook. And if a lot of people are deciding not to use it, there's a lot of other places to invest your money. Road Dog says short. I wouldn't short the stock. I just don't own it. I wouldn't buy it. But again, this is just my opinion. And I think it really reflects in the stock price. You know, all major stocks across the board are down big. But if you actually look on my Twitter, I posted about 15 charts. So I took the largest 15 companies in the S&P 500 by market cap, and I posted a weekly chart. And I said, notice the stocks that have absolutely obliterated their 200-week moving average. And Meta, by far, is the worst looking stock. Now, Google is down big, Apple is down big, but none of these have undercut their 200-week. I think Meta, or Facebook, whatever you want to call it, is the only major FANG. Well, Netflix, too, has gotten absolutely its head ripped off. I think those two are the only ones who have obliterated through their 200-week. Hey, David S. is new subscriber here, and I love your analysis. Thank you, David. I appreciate the compliment, and thank you for being here. I appreciate it. Jordan says, hey, Tom, do you invest in any Chinese-based stocks like Tencent? So let's talk about China for a little bit. And I'm going to give you my unbiased take. And I know that China is a very hot button topic. So I just like to preface this by saying, I respect everybody's opinion. If you're a bull or a bear on China or very critical on them, I understand. But here's what I'll say. And this all goes back to when I was a senior in college. I started to study extensively artificial intelligence, AI, and machine learning startups in China specifically. And I came across a gentleman by the name of Dr. Kai-Fu Lee. So I'll say that again. Brilliant guy, absolutely brilliant guy, Dr. Kai-Fu Lee. Okay. And Dr. Kai-Fu Lee was the former president of Google China during the tech and telecom bust. So here's the reason why I think that's important. He was in charge of advancing and really pushing and marketing Google in China. Again, if you read the book, I'll recommend it to you guys. It's called AI Superpowers. And essentially, obviously, it didn't work. I won't go into the whole story. We've done many live streams on it, but in the 2000s or leading up to the tech and telecom bust, China was largely regarded as sort of like a ripoff. You know, a lot of the big entrepreneurs in Silicon Valley, one of the things that they would say is, there's no innovation coming out of China. They just rip off everything that we do. But now that has fundamentally changed. That has fundamentally changed. And Dr. Kai-Fu Lee is now retired. He runs a venture capital firm called Sinovation Ventures, where he exclusively only invests in Chinese-based AI, machine learning, and cloud computing startups. And he'll tell you essentially the evolution of innovation in China and sort of how that started. So it did start as China was ripping off a lot of the, American innovation and source code, but now that has evolved since the government has invested billions of dollars into Chinese-based entrepreneurs to innovate, start their own companies. Now you're seeing a lot of big things coming out of China. However, with that said, this is what I'll say, because I actually used to have a pretty broad-based exposure to Chinese equities, or I should say ADRs, American Depository Receipts. I don't own any of them anymore. And I'll say this, and this is going to be a very, very controversial statement, but I think it's fair. I think I have to say it. So I'll say it. Teresa Diaz, thank you so much for your donation. I appreciate you very much. You're way too kind. I believe personally that if China wasn't communist, they would blow past the United States in terms of innovation. And the reason why I believe that China will never do that is because they differ from the United States in a very, very big way. And here's the key. So I'll give you the keys to the kingdom in the United States and why I believe the United States will always be the world's superpower. And here's why. We continue to signal to the world that if you want to come to the United States and you want to work hard, if you want to build a business, you will be able to have an equal opportunity at a shot of success, and you will be able to get rich. And so long as that is the signal to the rest of the world's entrepreneurs are going to want to come to the United States to start a business. Free markets, capitalism, some of the best institutions in the world here in terms of educational institutions, the Ivy League schools, things like that. So as long as the United States doesn't go down this path of, government bureaucracy, red tape, and we keep fair and free markets and establish an environment of equal opportunity to be able to be an entrepreneur, create businesses, innovate, go to top schools, the United States will always be a talent suck or a brain drain to the rest of the world. Now, there's some brilliant entrepreneurs in China, brilliant. But whenever you get too successful in China, the government takes your cake away. And entrepreneurs don't like that. You saw this with Jack Ma. You saw this with many, many other Chinese entrepreneurs. And if you want to learn a little bit more about it, I have a very good book for you guys that I would recommend. And you can learn a little bit more about Sinovation Ventures, which is a venture capital firm solely focused on investing into Chinese AI machine learning companies. And it was founded by Dr. Kai-Fu Lee, and he is the author of the book, AI Superpowers. Hey, Amanda, thank you so much for the $5 donation. I appreciate it very much. But he just recently came out with another book called AI 2041. And it's actually a very interesting book. It doesn't read like your traditional book about business. I actually really enjoyed the way that book was written. It was actually written, so I'll give you guys a quick story. I don't really want to ruin the book for you guys. I hate recommending a book and then ruining the book. I tend to do that a lot on the stream. So I'll try to sum it up in like 2 sentences. So the way AI 2041 was written, Dr. Kai-Fu Lee takes his experience from working in AI and makes 5 conclusive predictions about where he sees artificial intelligence and machine learning taking us. And he takes that to a very famous fiction writer. And the fiction writer, based upon Kai-Fu Lee's predictions, he writes stories of like an AI utopia based upon his 5 scenarios. So it's not a pure play fiction book where it's all nonsense. It's based on his predictions, but he hired an amazing writer, an amazing fiction writer to sort of describe his AI utopia in the future, his main 5 predictions. So I thought that was rather unique. So I would check out those 2 books. Jordan, I have not. All right, I'll stop rambling. So this is 6th Avenue, Avenue of the Americas. And this is the Bank of America, the very famous investment bank here. But if you guys are enjoying tonight's live stream, feel free to leave a like on the video and hit the subscribe button if you're new. We usually go live about 5 days per week between New York City and Miami, and we'd love to have you along for the ride. Rafed says, what's the other one? So the two books is AI Superpowers, and the second book is AI 2041. If you just Google Kai-Fu Lee books, you'll see his two books pop up there. And if you're not a big reader, if you listen to any one of his interviews are pretty good about explaining his thesis of the future of China. And I think the only thing that's holding back China from being a major player is China itself. You need free market capitalism. You need incentive. So, all right, that's enough book recommendations for tonight. I think I gave you guys like 70,000 book recommendations. Hey, James says, I am a programmer, going to check that out. Thank you. Yeah, and James, I will warn you guys that many people agree with what he says and many people don't. So I will prepare you for that. But I would just hear him out. That's all I would say. Because at the end of the day, my thought process was, I'm hearing all of this craziness, listening to CNN, listening to Fox News about China. And I'm like, wait, if I listen to CNN and Fox News about what's going on in China, I'm going to get a one-sided narrative, right? This is American media. So if I want to learn about China, I want to learn from a guy who was a president at one of the top tech companies in history, focused on expanding the operations in China. So I think it's a different point of view, but it's very good. Very, very good. Well, this is my old office here, West 45th Street and Avenue of the Americas. I used to work here for many years. Hey, really quick, everybody. How bad is the microphone tonight? Because it is extremely windy and I do not have the mic. It's buried at the bottom of my backpack. Hey, Islam is here. It says, hey, Tom, while we're on the topic of investment banks, why do you think Goldman Sachs made that change from private to public? Just wanted your opinion. From private to public. What do you mean by that? Could you clarify? I'm not sure what you mean. Golden's Dawn says you sound great. Appreciate that. Yeah, I mean, maybe just the original mic in the iPhone is more than enough, but usually we get really horrible wind noise. Pink Curb, thank you. So this is the Marsh & McLennan building. So now I know we talked about Bridgewater Associates today because Ray Dalio has officially stepped down. Ray Dalio is arguably one of the most successful money managers on the planet. Now, if we really want to try to determine his success, the S&P 500, the Dow Jones Industrial Average, and the NASDAQ are all down over 20% this year. Do you guys want to take a guess at what Bridgewater Associates flagship fund returned this year? Does anybody want to take a stab at it? So Bridgewater Associates, their pure alpha strategy fund, does anybody want to take a guess at what their year-to-date return is? Keeping in mind that all of the major equity indices are down probably about 25%. Siva is here, good to see you. Lots of trash on the floor. James Tigers is 30%. Okay, good guess. Good guess, you're close. Mike says 10%. Okay, I'll give you a hint. So far, Strider says 8.9%. So far, James is the closest, but not yet. Close, but no cigar. Vance is 31%. Nope, close. Billy says 24. Dusty Cole says 20. It's higher than 30. I'll say that. It's higher than 30. They returned, okay, two more guesses. British Gray says 20, Mike C says 25. All right, I'll give you guys the answer. I won't make you wait. So this year to date, the firm's Pure Alpha strategy has returned 34.6% so far in 2022, all while the major equity indices are in a screaming downtrend. So big props to Ray Dalio and his team. It's crazy to see him taking a step back from the business and retiring, but I think he's of that age. I think he may be like 75 now. Hey, the ABX girl, thank you for joining tonight. Please have a good night. And I'm glad that you are safe from the hurricane. Yeah, Mike C, so that would have been much better than what I've done. Much better than what I've done too. So this is the News Corporation building here. This is home to Fox News, the Wall Street Journal, Barron's, and Investors Business Daily. Now, I think I've said it before, but we do have a lot of new people that have joined the channel, which thank you so much for subscribing. Appreciate it. But News Corporation actually just bought out Investors Business Daily, which was founded by William J. O'Neill. So William J. O'Neill, or Bill O'Neill, is very famous for creating the newspaper Investors Business Daily. He also is most notable for his famous investing book, which is How to Make Money in Stocks by William J. O'Neill, the Can Slim style of investing, which is essentially the type of investment that I subscribe to. And News Corporation acquired the company for, I believe, $250 million. So it's a Los Angeles-based company. I'm not sure if their headquarters are going to move here. They're still in LA. But if you guys are interested in sort of the topics we talk about every night on the stream, if you scan the QR code on the top right-hand corner, usually every other Tuesday after the market closes, I'll send out my Behind the Street newsletter where I give all of my thoughts on the US equity market, emerging markets, fixed income, housing. So if you want to see my thoughts, it's a good way to support the stream and stay connected. It's also a good way for us to share ideas. A lot of the stuff I talk about on the live streams and a lot of stuff that you guys talk about on the live streams, I'll put in the newsletter. So if you scan that QR code and punch in your email, you'll probably receive it every other Tuesday. But now we are coming up against Radio City Music Hall, which is West 49th Street right here on Avenue of the Americas. Dan Zhang says, I recently just collected the entire Jack Schwager's Market Wizards book series. That's a very, very good series. So my favorite, there's two specific investing individuals that are highlighted in those books. And here's my top two. And I'm not sure which books they appeared in, but my number one top favorite is Anthony Saliba. Now, I'm not sure if many of you are familiar with Anthony Saliba, but he made a lot of money trading options. You're a derivatives trader. And I believe he's based out of Chicago. And if I'm not mistaken, he retired, then came out of retirement and went on to found I think it's a cryptocurrency derivative exchange, I think. So Anthony Saliba. So if you guys are interested in learning about the pricing of options and derivative products, he's definitely your guy, Anthony Saliba. And then number two is probably Mark Minervini. He was also highlighted in Market Wizards. Those are my top two. Anthony Saliba. Ooh, it is cold and windy. And Mark Minervini. This is the best halal food truck in the city. Right here, Adele's Famous, fantastic. T3, yeah, it's been a while. I got to get back on track. It's just been crazy busy, but now that we are officially in Q4, I think things are going to die down, so I'll be able to put more out. Okay, so Dan Zhang says, yes, Anthony Saliba appeared in the first Market Wizards book. He was a market maker on the floor of the CBOE, made $9 million before he turned 30. Yeah, his story was really crazy, man. Yeah, somebody says the halal carts are the best. That one is by far the best in the city. It's right across the street from the very famous Radio City Music Hall. Denise NYC says, looks chilly. It is. It's 52 degrees, windy, misty, and rainy. Not good. And I'm just coming from Miami, Florida with 86 degrees and bright sunshine. So definitely going to take a minute to adjust. Hey, the investigator. What's up, my friend? Good to see you. Happy Tuesday. Hopefully your week is off to a good start. Welcome back to New York. Hey, Neil Bell says, thank you for enduring the weather conditions, for the stunning sights and engaging commentary. Well, thank you, Neil, for being here. We appreciate it. Yeah, Mike sees the halal line is less than an hour long. It's a first. Yeah, I'll give you guys a tip. If you ever want to go to that particular halal spot, the time to go is when it's the worst weather out by far. Because if you go when the weather is good, you're going to be waiting like 3 to 4 hours. But if you go when it's rainy or snowy or nasty out, it's going to be easy for you to get through that line. Hey, Devin is here. Says, hey there, good to see you. Fun Feed says it was National Taco Day today. Was it really? I think it was National Coffee Day too. All right, so speaking of major financial firms, investment banks, right here to the left, I'm not sure if Marcelo is still here. This is UBS. And adjacent there across from the UBS is Neuberger Berman. And my friend actually just took a nice job at Neuberger Berman, big asset manager. Man is here, says, hey, I just joined. Good to see you, man. So I'll show you guys the Neuberger Berman building. Now, I'm not sure if you guys remember the live stream that we did back in September, where we actually visited the old Lehman Brothers building. And Lehman Brothers was one of the investment banks that actually went belly up during the great financial crisis. And now Barclays Investment Bank, which is the British bank, has now taken its place right there on the northernmost side of Times Square. Hey, Charles Collins in action says, Tom, I don't think we'll have a harsh crash in real estate market. From 2012, all of the mortgage loans are solid. The reason, NINA, no income, no asset loans do not exist today. Yeah, I mean, that's a good point. That's a very good point. The underwriting is definitely more solid. You know, leading up to the 2008 financial crisis, to your point, they were giving out mortgage loans like hotcakes, right? No income verification, very low credit scores, and these were called subprime loans. Now, the problem was, since these were subprime loans, And a great majority of those particular loans were actually ARMs, so ARMS, and that is an acronym for adjustable rate mortgages. That meant when interest rates went up, right? So generally when the Federal Reserve raises rates, on a technical sense, it does not impact mortgage rates. What does impact mortgage rates is the trajectory of that 10-year US Treasury yield. But as the 10-year US Treasury yield goes up, it usually moves in tandem or in lockstep with that 30-year mortgage. So in 2008, once interest rates started to go up, people's adjustable rate mortgages started to go up. You had balloon payments. People started to lose their jobs. Nobody could make their mortgage payment. And you had a wave of defaults. Now, there still is adjustable rate mortgages on the market right now, but adjustable rate mortgages of today are very, very different from the adjustable rate mortgages leading up to the great financial crisis. You know, oftentimes there are interest rate caps or locks on these ARMs, so they can't balloon, 10% a year. It maybe can only go up a couple basis points a year, assuming interest rates do go up. So I agree with you. The people who are buying homes now are better capitalized, putting better down payments on there. So I think your default risk is going to be substantially lower. Hey, Melee is here. This is good evening from Scranton, Pennsylvania. Good to see you, Melee. If you look in the distance, this is the 432 Park Avenue, one of the Billionaires Row buildings here. Man, that looks really cool amongst the clouds there. Hey, Cindy Foley is here. Good to see you. I see my friend George. Welcome, George. Oh, it is really bad weather. All right, team. I want to show you this building, and then we got to cut the stream short. I got a long day tomorrow. Busy day. I got to do a couple presentations, but we will be live tomorrow. We will be live tomorrow at 8:30. So if you guys enjoyed this live stream, hit the subscribe button. Join us tomorrow. We'll be walking around New York City, hopefully in a little bit better weather. But I do want to show you guys the Alliance Bernstein building right here. And there's a very famous hedge fund that's in this building called Fortress Investments. And Michael Novogratz used to work at Fortress Investments. And now he has branched off to start his own thing at Galaxy Digital, where he is actively hedge hunting, or headhunting, I should say, junior investment bankers to go work in the cryptocurrency space. So we'll talk about that a little bit more. But everybody, I want to thank you for joining me on this very, very raw, windy, rainy, a little bit nasty night in New York City. We will be live tomorrow, 8:30 p.m. Eastern time. Once again, if you enjoyed the conversation, you could subscribe to our newsletter at the top. Tomorrow we'll be having some additional talks about more interesting conversations. So Zach Drew, I want to thank you. Lockjaw, Denise, New York City, NNB 045, thank you for joining. Fun Feeds, thank you. Dr. Longest, thank you so much. Just Travel, Wanda, thank you. Dutchman, all of our moderators, photos from around New York. Roland Clark, thank you. Melee, Dusty Cole, and to the Mighty Bull, have a good night wherever you are, because there's always a bull market somewhere, and you just need to know where to look. I will see everybody right back here, New York City, 8:30 p.m. tomorrow. Make it a good middle of the week. Happy Wednesday. We'll see you later.